Okay, hello. Welcome to our presentation today. My name is Ryan Masterson with Green Hat Web Solutions, and I'm very excited to be here. We are doing a presentation together with the Commons on Champa and with Denver Economic and Development Opportunity. So with the Commons on Champa here, there's Carrie Singer. You can say hi, Carrie. All right, great.
Hi, everyone.
And feel free to introduce yourself real quick in the comments on Champa, Carrie.
Yeah, absolutely. Hi, everyone. My name is Carrie Singer. I work for the City of Denver, specifically Denver Economic Development and Opportunity. And you'll hear from my colleague, Michael Beavis, later on in this presentation. But I work out of the Commons on Champa, which during normal times is a free and open to the public kind of community space where entrepreneurs have access to free advising and a plethora of programming. However, now during kind of still in quarantine times, the Commons has been shut down. So if you'd like to learn more, I would encourage you to visit the Commons on Champa's website, which is www.thecommons.co. I had to think there for a minute because I don't often, thecommons.co. A lot of our programming has gone virtual, so there's still a lot that you can take advantage of in addition to business advising. So take a look at the website, the Commons on Champa, and we're happy that you're here today.
Yes, great, thank you. And together with Michael Beavis here, we will be presenting today on how to create an e-commerce business and or how to pivot to an e-commerce business if you already have a physical brick and mortar store. And so we're very excited about this series of meetups that we are doing together with these great partners. Our plan is to do some meetups every 2 weeks, and we have a whole list of topics to talk about. So this first one today is going to be about just kind of how to start an e-commerce business, just from some real basic levels. And in our second one, which we will make the announcement tomorrow, but the second one's already kind of in plans. It's going to be on how to brand your e-commerce store and your e-commerce products. And so it'll be all about branding. This will be led by Fabiana Nardi, also from Green Hat Web Solutions, and it will be very informative on anyone who's looking to understand how to create the best brand for the highest success. So, all right, without further ado, let me pass this over to Michael, and so he can enlighten us about the e-commerce process. And so, Michael, take it away.
Yeah, sure. Thanks, Ryan. And I'm happy to be here doing this with you. And I've been following along with you and Fabiana quite some time, even before I started my role with the city. So as Carrie mentioned, I work alongside Carrie in the Office of Economic Development and Opportunity. I oversee all things innovation and entrepreneurship related for the city. And I happen to be an entrepreneur myself that owns and operates an online e-commerce store. So I'm excited to be here with you today. I'm going to just, since this is the first in a series that we're doing, I am going to just briefly kind of touch on some of the things to think about as you're setting up a business. So in case there's anybody on this call who has yet to set up a business and still, kind of in those early stages where they're trying to figure out, should I be an LLC? Should I stay as a sole prop? What should I do? So Ryan, if you're okay, I'm going to share my screen and I'm going to share 2 slides from a typical presentation that I normally do. Mm-hmm. So I should be able to do this here.
And while Michael's doing that, let me also kind of make the announcement that if you do, since this is like a small group today, please feel free. Anyone can ask questions as we go. Michael has a whole presentation of stuff to cover, but this is definitely an interactive workshop. We do a lot of these meetups on a regular basis. It works really nice. The quantity of people that we have today is about our average size, and it's a real nice environment for talking and discussing. So please feel free to ask questions anytime as we go.
Yep, interrupt often and just ask away so we can make it as relevant to you, your specific situation as possible. So 3 basic things that I like to talk to people about when they talk about, what structure should I be as far as the type of business that I want to set up. And a lot of people are familiar with, sole proprietorships or LLCs, or should I be a C Corp or whatever the case is. And we'll talk about that a little bit. But the first 3 things that you kind of need to ask yourself here when kind of making that decision is, first and foremost, control, right? So are you setting up a business that down the road you're potentially looking to get some outside investors to jump in and help you kind of grow and scale the business? And are you willing to give up equity in that stake? And are you even willing to give up maybe even more than 50% of the company in order to acquire the capital that you want? And so that's just something that you have to be willing to kind of chat with yourself about it and talk about. The second one is liability, right? So when you think about setting up a business, so you always have to be thinking about what happens if something that I created, harms somebody else intentionally or unintentionally in some way, and they want to come back and seek restitution for that. So you need to think about the structure of the liability. And you always want to kind of create that barrier between yourself and the business entity so that you can protect your personal assets and personal wealth and keep that out of the max. And then third and finally is taxes, right? So what's kind of the tax implication of any revenue that you might generate from the business itself? And so then on this next slide here, we're just going to kind of talk through those 3 scenarios for each one of these structures, right? So a sole proprietorship basically is 100% in control by you, right? Typically, it's tied directly to your Social Security number, your personal Social Security number, when you register it with the state. And I'll talk about that in just a little bit. And these are oftentimes things that we see things for, small businesses that are doing low risk kind of, let's call them craft type projects, right? I'm creating an Etsy store online and I want to sell handcrafted artistic note cards as an example. Relatively low risk, right, of somebody being harmed by that product. It's probably going to generate some revenue that will help you create some kind of sustainable living, but it's not going to be in the millions of dollar range, and so tax implications is maybe not something that's super simple to do. You go on the Secretary of State's website, you register the business. There's right on the website, it will tell you kind of the 7 criteria that you have to meet in order to be deemed a sole proprietorship. So any income that you generate from that business as a sole proprietorship, you just simply claim it on your personal tax return. So maybe you have this as a side business and you still have a regular W-2 job working for somebody else. You just add this income onto your personal taxes, and the process is really simple. You don't necessarily have to file a separate income tax for that. A partnership or limited liability corp, I'm going to talk about the limited liability because that's probably the most common type of business that we see set up across the state. So partnerships are typically deemed for law firms, large accounting firms, things like this, where all the top executives basically are kind of ownerships within the business. But a limited liability corporation is probably the most common type of business that we see set up across the thing. Now, the nice thing about an LLC is that first and foremost, it allows you to dictate how control is divvied up across the organization. So I, as an individual with 0 employees or 0 investors in my company, I can set up an LLC, right? So that, I don't have to just be a sole proprietorship if I'm just one person. I can set up any of these types of business entities even without other owners. So control is something that I have a significant amount of control over, right? So if I want to bring in investors, I can choose to give up equity, as an example, in chunks based on the valuation of the company and things like that. The second piece is the liability aspect of it. So limited liability, it's kind of built right into the name, right? It releases you from a majority of the liability risks associated with the business. So I'll give you an example of my own business. I make a physical dog product. a proprietary dog cooling vest. And if my product were to go out and unfortunately harm an animal, and somebody wants to come back and sue my company, it keeps that level of separation there. So that means they can't come after my house, and they can't come after, you know, any money I have in my savings account or retirement accounts, whatever the case is. So they can go after all the assets of the business itself, but not come after me personally. It's called limited liability because there's always some sticky points in there, but for the most part, it protects me as much as possible. From a tax standpoint, the nice thing about a limited liability corporation is what they call a pass-through entity, right? So that means that the income that's generated by the business typically is passed through to the individual owners of the business in some form of either income as a salary or a paycheck, or what they call distributions to owners. The nice thing about this is that it makes filing your corporate tax return super simple. You simply fill out a Schedule C that says, you know, the limited liability corporation made $100,000 last year, and the owners got paid out $100,000, or minus the expenses, right? And so, again, the individual owners who were paid out through that Schedule C will report that on their personal income tax. Again, you can have W-2 income from other employers as well as Schedule C income from your LLC. And so this pass-through entity is important because from a tax standpoint, what it means is that the tax liability is then pushed on to the individual owners of the business. And most individuals will pay in a tax bracket typically between 12 and 28% taxes, depending on your income level. As a corporation, if you were to leave those profits in the business, you typically pay upwards of 45% tax against the income that's left in the business. And so that's why these pass-through entities are created, to allow individuals to to maximize kind of their tax potential for the business itself. So super simple to set up. You simply go to the Secretary of State's website. Doesn't matter what state you're in, the process is pretty much the same anywhere in the United States. First thing you want to do in this process is right on the website, there's a box that says I want to set up, or I want to search a business name. So you want to search for the name that you want to create or that you want to call your business, and make sure that nobody has it. Now, here's the interesting thing is that it's state by state, right? So be thinking long-term what you're trying to create. And I know that we'll talk about this in other series of this program, but when you think about things like branding, right, as an example, and are you going to create a business that you want to have a nationwide brand recognition? If that's really important to you and that's part of the vision of what you're creating, you might want to check some other states, right? So I'm going to create business XYZ in the state of Colorado. Nobody else has it, but in the neighboring state, over here in Nebraska, there is an XYZ business. I do a little homework. I realize that business is a physical business located in a particular town, and it doesn't appear that they're going to be doing anything else outside of Nebraska. Maybe it doesn't bother me that much. If I realize that the name that I picked is already in 5 or 6 other states and they're in a similar line of business of what I'm creating, I might want to start to think a little bit about what I'm going to call my business and maybe be open to changing the name a little bit. But first and foremost, you switch. You look to make sure that the name is not taken within the state in which you want to register your business. And then you now there's kind of 2 options here in the state of Colorado, is that one is if you're like, I'm not ready to do this yet, but I might do it in 6 months. You can click on a little radio button and pay, I think it's about $25 to save the name. You're basically reserving it. But then when you're ready to use it, you go in and you actually register the business, and it costs $50 to do that. It's going to cost you $50 to register the business whether you use it or not. So you just have to decide on if you need to pay $20 to save it, and then pay $50 on top of it, or do you just want to pay the $50 and then own it? And then if you never use it, then I guess you're just out the $50. But that's how it works. Every year you'll get a notification from the state that says, hey, it's time to renew your business or update us of any changes to the business, an address change, anything like that. Super simple to do, and it costs you $5. You click a little radio button that says everything's the same and this business is still active, and you pay your fee to process the document, and you're good to go. Okay. Corporations typically, go ahead. Is there a question?
I just thought of one thing to jump
Yeah.
in while you're talking about the names. We will, in a future webinar, we're going to talk about the SEO and search engine optimization for your e-commerce business and your platform of choice, whether that's WordPress or Shopify. But just since you were talking about the names and registering the names, I just wanted to mention just one really small thing on this. Some people ask if the .com version of a name is required, if it has to be .com, or if it can be something else like .co or .biz. And from an SEO perspective, it doesn't make a difference. So it used to in the past, but times have changed now. The content on the website is much more important than the actual domain name, and the social signals and other signals that's getting from offsite and backlinks will make a difference. So, but when you're thinking about the name of your business and you're kind of just thinking all the different things, such as looking to see if it's other businesses are using that name, if it's available. One thing that I'm sure you'll probably be thinking about too is the .com available? Yes, you can get a .com if you want, but it doesn't matter. It doesn't impact SEO. So I want to just throw that out there.
That's a good point. Yep. And there's a fun site that I like to refer people to if you're in the process of trying to figure out a name for your business. The website is called Bust a Name.
Bust a Name.
So Bust a Name. So you type it. So BUST a name, all one word. And what I like about that site is a couple of different things. One is like, if you don't know the name that you want to call your business, but you know what the business is going to be about, or the audience that you want to reach, or whatever the messaging is that you want to send, you type in a bunch of keywords into the site and it will give you name recommendations. In addition to the name recommendations, it'll tell you if the domain names are available, the .nets, the .cos, the .biz, the .coms, whatever it is. And it'll also tell you some recommendations for some social media handles because that's going to be important across your brand for whatever you create the name in. So
yeah, that's great.
I
This
really
is a great
like
tool.
that.
I haven't seen this one before.
Yeah. And to Ryan's point earlier as well, when you're registering your business on the state's website, is let's say I'm going to set up an LLC, you don't have to put LLC in the name of your business on the website, because you're going to click a radial button that says I want it to be an LLC. You can include it, but it's not a requirement for you to list that as part of the business trade name, what they call the trade name. All right, so my business is called Cool Skins. It's an LLC, but I don't have to register it as Cool Skins LLC for the trade name. I just simply call it Cool Skins. Okay, so that's kind of just one tip and trick there. So the other kind of pretty popular one is a C Corp. Now, a C Corp is pretty common, especially for businesses that are anticipating raising a bunch of capital, because that's how investors like businesses to be structured, because that's what their legal documentations already say, and it saves them money from not having to go back to their attorneys and change the language in the document. A C Corp gives you kind of all the advantages that we talked about with an LLC, from the separation of liability, from the tax advantage as well. But it's typically reserved for larger entities, because you have to file separate tax documents that you typically will get an accountant involved with those and those kinds of things. And there's also entities called S Corps and things like that. Typically, if you're going to be in that range, you're going to be working with an accountant and a legal team that's going to make recommendations and suggestions for you on doing that. Now, one thing to keep in mind with all of these business structures that we talked about here is that you can kind of change midstream, right? So I started my business as a sole prop. 6 months in, it's going pretty well. Somebody mentioned to me, oh yeah, you should be thinking about the liability piece, and I forgot about that, and now I do want to do that. You can simply go on the state's website and request to make a change in the entity. All right, you pay again another little small fee to process paperwork, and it basically kind of becomes that way almost immediately. Right, so you can go from a sole prop to an LLC to a C Corp. very common kind of life cycle of a business as it gets created. But I just wanted you to keep that in mind. And then finally on the list here is nonprofit corporations. So a lot of times people think like, well, I can't create a nonprofit because it's really hard to get a 501c3 status. Not true. I've actually started 6 different nonprofits in my life. Relatively simple to do. The process is similar to what I just explained to you for the other entities. You go right onto the state's website. You select the option to say we are going to be a nonprofit. And you're kind of done with it, right? The next phase for all of these business entities is for you then to go on to the irs.gov website. So at the federal level, to generate a tax paying ID number for yourself, sometimes known as a TIN, a tax identification number, or an EIN, an employer identification number. Okay. And so you don't need to do that for a sole prop because again, you're going to use your own individual social security number for tax reporting purposes. For an LLC and a C Corp and a nonprofit, you're going to register to get an EIN number. So there's no fees to do that. You go to irs.gov and if there's right on the main screen is an option for you to go ahead and register for those taxpayer ID numbers. It typically takes about 2 weeks for you to get confirmation from the federal government that they'll send you a letter in the mail and they'll typically send you an email to accompany it that says, here's your new taxpayer ID number. You use that taxpayer ID number to set up your bank account, to commit to any agreements that you might have with vendors or suppliers that you're working with. Any retail channels that you do from a sales tax perspective, those kinds of things. You're going to need that number for those purposes. Okay. A nonprofit's the same process, right? You're going to go in there, you're going to check all the boxes that says that you're a nonprofit entity, and they will generate you a letter that says, congratulations, you've been awarded your 501c3 status, and here's your taxpayer ID number to give to donors and grant makers and those kinds of things. Basically to become a nonprofit, the idea is that anything that you're doing basically benefits the greater good, right? So it could be something as narrow as one specific audience, right? We work only with school teachers, but it's for the benefit of the school teachers more so than the profit of the entity, and you likely can get a nonprofit status for that. The one thing to keep in mind with nonprofits, and sometimes people think like, well, I'm going to do a nonprofit because it's easier to raise a bunch of money on the front end from donors and those kinds of things. And it might be the case. And there's plenty of nonprofits in the world that make lots and lots of money. They make lots of profits, right? So credit unions are a perfect example of this, right? So they're banking institutions, just like a Wells Fargo or Bank of America or any corporate bank that you're familiar with. They primarily focus on individual consumers. They are all registered as nonprofit entities, and a lot of them probably profit about $50 million a year in net profits. And there's a whole different kind of tax thing that they do to move that money around, and totally legal, right? You, as a nonprofit, as the owner of a nonprofit or the executive director of a nonprofit, you can also pay yourself a salary that you feel is appropriate, right? So the National Football League has a CEO of their nonprofit entity who makes $45 million a year in salary, okay? So don't think that nonprofits mean you can't make money. You just have to understand how the money kind of moves through the organization differently and how to report it out. The one thing that I like people to be aware of with nonprofits is that you can't ever sell a nonprofit for the intention of making money, right? So oftentimes people will say, I'm going to start a business so I can grow it to this level and then sell it for millions of dollars and ride off into the sunset, right? And that's fine. But you can't do that with a nonprofit. So when you have a nonprofit, you can only transfer it to another nonprofit entity, right? So you don't typically sell it for millions of dollars. And it's just something I need to let people know about in that process. So with that, I'm going to stop talking for a little bit and see if there's any questions I can answer before I turn it back over to Ryan.
Hi, Michael. This is Alexis. This is great information. Thank you so much. I do have a couple of questions about the LLC. So I recently set up my LLC with the Secretary of State's office. Excuse me. I didn't realize I had to still have the IRS, the EIN or the TIN. I am just a one-member LLC, just myself right now. I don't have any employees. So do I still need the EIN?
Yep.
Okay.
And it's super easy to get, and it doesn't matter that you could have had your LLC in the state of Colorado for a year
Okay.
and not registered for that TIN number. And it's fine to go ahead and do that now.
Okay,
Right.
great.
So on the IRS site, it's going to say what state are you registered in and all that kind of stuff. And they're just simply going to check to make sure that you're in good standing with the state.
Okay, perfect.
So, yep. So I highly recommend that you do that because you're just going to need it. Like when, if I don't know what your business is going to be, but if you're working with suppliers as an example, they need that information because they need that for their tax purposes to say we paid this entity, $10,000 or they paid us or whatever, however it works. So it just needs to match up on tax returns. So
when I I'm going to be using a Shopify store. They'll need that information, I'm assuming, through the Shopify store to charge sales tax by state, correct?
Yeah, and I'm glad you brought that up, Alexis, because that's the one thing that I forgot to mention here. So if you are going to be selling physical products, as an example, through an online shop, as an example, you should certainly set up for paying taxes, right? And so Shopify is really nice because it kind of does it for you. You basically go on and click a bunch of boxes to say, go ahead and figure out the taxes by the zip code. And they'll collect the tax for you as part of the sales transaction that happens on the website. So that part's super nice, but you are still responsible for paying those taxes to the city or county that sales transaction took place in, right? Or where the goods are being delivered. And so you, like here in the city of Denver, as an example, if I sell physical goods online or physically face-to-face to somebody, I go to the city and county of Denver's office and I pay, I think it was like $25 or something to be a registered sales tax payer in the city. And then every quarter, basically I go online and I say, this is how much sales tax I collected from sales on my website. And here's your cut, right? So simple to do, but it's something to be thinking about because, in theory, it sounds really great. I'm going to sell in every market in the United States, but somebody has to manage that, right? And if the known numbers or the volumes are small, it's easier to manage. But if you're doing, hundreds of units of sales a day in 1,000 counties across the United States, it's going to be some paperwork. So just be thinking about that. And you can set that up on Shopify. So I have a Shopify for my account as an example. I have it set up to calculate and collect sales tax in every county in the state of Colorado. I don't have it set up for other states across the United States because I wasn't sure how much volume was going to happen there. Now I've been at it for about 6 months in the new Shopify platform, and now I have a better sense and I have data, so I can go in and start to register my business to pay those sales taxes in those different counties.
So if, let's say, in the first 6 months, I sell in 10 different states my product, would I have to register my business in each of those 10 states?
Nope. You don't have to register your business in those states at all.
Okay.
You can register your business in any state that you want. And in theory, it's supposed to be in the state that you operate it out of.
Right.
But C Corps, as an example, is still very popular. It's not necessary, but it became popular back in the early 90s to everybody who wanted a C Corp registered it in Delaware because it was like $25, no questions asked. And, I'm a California business or whatever.
Right.
But that was because a lot of states were charging, in some cases, really astronomical fees to register the business within the state. So people were like, well, I don't need to pay an extra, several $100s to register this business. I'm just going to go to Delaware. It's $25 and I'll be done with it. But you can register the business in any state and operate basically anywhere in the world.
Okay. I guess I'm still a little bit confused. I apologize. So if I sell my product in Wyoming, that's a bad example, in another state, when the taxes are due, will Shopify automatically send those?
If they won't send it to the state or the county. So it's a county tax, basically a sales tax. you have to do it yourself. There are tools that you can use on the Shopify platform.
Okay.
There's like plugins that will say, hey, we'll calculate it and we'll pull the money from your Shopify account and we'll pay it. We'll pay the bill. That's probably something you do down the road as you start to gain traction.
Got it.
The reality of it is, and this is me speaking, this is me not giving you advice. I'm not that concerned about it in the beginning until I start doing some real numbers.
Got it.
Right? Because if I'm not collecting at least $600 in sales tax,
Okay.
in a particular region,
Right.
nobody's probably going to come hunt me down. Right. So I have some time to figure it out. And
Yep.
that's how I operate. Again, I'm not giving you advice.
Got
I'm just
it.
telling you how I operate.
Yep.
Okay? Yep.
Thanks.
Mm-hmm. Any other questions?
Michael, one thing that I was thinking about is how easy it is to start a business here compared to other places. For example, in Brazil, my wife is from Brazil, so we talk a lot about the different types of regulations there. And there, it's very difficult to start a business compared to here. Here, if you're a sole proprietor, correct me if I'm wrong, but all you do is two things. You register your business name at the Colorado Secretary of State on their website, and which Carrie added to the chat too, by the way, the link for that. And then two, go to your bank and open up a business account for that business. And that's it. Like, and by the way, to register at the Secretary of State, you may have mentioned this before too, but Colorado is very cheap as well. It's like $20 or $25. I believe, right?
Yeah, it's $50 now, but
yeah. Oh, $50. Okay,
so it's still pretty cheap. Yeah, it was
yeah.
$25 till about a year and a half ago, I think.
Okay,
it was $50 last week.
Yeah.
I can tell you that.
Yeah. And then that's it. I mean, that's just, it's so cool that is really all you have to do, and you officially then have a business. Would you? Is that accurate? Would you say that I'm missing anything?
Yep. Nope. It's pretty simple. Yep. Super straightforward. It starts to get complicated with things like sales tax and that kind of stuff, but it's definitely manageable to do. Again, there's a service called TaxJar as an example, and I'm not sure how effectively it works with Shopify, but Shopify is pretty easy to use. And it'll help you calculate all those taxes, and there's options for you to get checks cut and sent to where they need to go. The pain point's just simply in the beginning of setting up the taxes, but the business itself, to register the business, it literally help people do it at the Commons all day long in about 15 minutes, right? Yeah. You can do it from start to finish in about 15 minutes.
That's great. And another thing too that I was thinking about is for an S Corp, one thing that you can do is you can have an LLC, limited liability company, as an S Corp election. And for us, we personally kind of experienced this when we were in LLC, just an LLC. We had to pay the taxes. We had to pay very high self-employment tax. But when we transitioned to an S Corp or an LLC with an S Corp election, then that reduced those taxes significantly. So then that may, that may not be appropriate for everyone, but maybe you could comment on like when you think that's a good idea and when it's not.
I've seen that happen many times, and there's lots and lots of businesses that, they have a C Corp as the umbrella. There's 2 S Corps underneath it. Those S Corps have 3 individual LLCs attached to it. Just depends on what the business is doing and what so each of those levels is really designed to tackle those 3 things that we talked about in the beginning, right? Who has control over that entity? What's the liability aspect of it? And what's the tax implications? Typically speaking, I would say that I'd see businesses take advantage of some of those more unique structures when they're really working closely with a legal or an accounting team. And/or an accounting team, because that advice is typically going to come from your accountant, right? Your accountant's going to say, hey, man, you need to be doing this because you're starting to make too much money, right? And you can't, now all of a sudden you can't keep pushing, several hundreds of thousands of extra dollars towards your personal income, as an example, because now you're going to start feeling it over there too. So there's a lot of different ways to kind of structure that. Again, they're all legal. But they're just things, and at the end of the day, it's also advisable, and this is where kind of the attorneys come into play with this too, is building overall wealth and valuation for the business, right? Because even if you don't have any immediate, plans to sell the business or whatever the case is, you always want to build wealth within the business, because maybe down the road you need some financing, as an example, and you want to go to a traditional bank. Well, they're going to look at all of these structures and all this, the revenues and how everything is structured in that way. So that part's important as well. Yeah. Any other questions I can answer? Okay, Ryan, I think I'll turn it back over to you.
Okay, thank you, Michael. It's my one question that we could talk about here is, do you see that there is any difference that a company who already sells things online physically would need to do differently to prepare to make the transition to e-commerce?
To just so make sure I understand your question, Ryan. So you're talking about somebody who has a physical retail front store.
Right.
They also are selling online existingly, or they
or maybe, for example,
now.
Someone is already used to selling things just physically. Is there any, but they're interested in going e-commerce, selling things online. They've never done that before. Maybe, is there any implications or advice that you would give them, whether it's the business type or beyond the business type as well, that kind of more has to do with maybe their first questions? Maybe their first questions, maybe the major differences would just be about taxes, something like that, or not. I don't know. Do you have any comments on anyone who might be in that position?
Yeah, so I think, and that's a great question, by the way, Ryan. And I think the way I would walk somebody through that is simply to go kind of through those three primary questions, right? What's the control aspect of it? What's the liability implication to it? And what would be the tax implications, right? And so with the first two, the control really comes into, so if I already have an existing business and I have a physical location, and maybe I've dabbled in selling a few things online through a couple of platforms and things like that, but that's not my mainstream revenue. But now maybe it's going to become that because of what's happening in the world, or I'm ready to pivot. Think about it from the standpoint of, if you're going to create a whole new separate online channel, so to speak, do you want that entity to be blended with the existing business entity, or do you want to create its own separate entity from a control standpoint? Right? If the online channel really blows up and becomes worth way more than the physical retail store, do you want to keep that separate for whatever reason is personal to you? Or if it does the exact opposite, if it totally blows up and crashes and burns, do you want that to tarnish what's happened at the physical retail location? So that's something that I definitely want to chat with people through on that piece of it. The liability piece is also another thing that I would want to address, because again, if I go mainstream kind of online, I'm opening up what I'm doing to a whole new audience. And their experience with me may be way different than the people who've come in and, over the years and spent time with me in a face-to-face environment. And do I want that kind of liability to be kind of intermingled, right? So you have to have that kind of pros and con conversation, right? Am I going to call the online thing the same thing as my physical store? Am I going to work on building this brand? Or I'm going to create something that's totally separate, but still sell the same kinds of physical products? I can do either one of those. And then from the tax piece, at that standpoint, early stages, if you keep everything the same, basically it's just additional revenue coming in from a different channel, right? So it would be no different than saying, I have a physical location, I sell product direct to the consumer when they walk into my store. Now I'm just adding an additional channel of income, same products, same services. It's all going to the same taxpayer ID number, and I'm just going to report it out at the end of the year. If I need a separate tax liability protection, then I'm going to think I need to think through that piece just a little bit.
Mm-hmm.
Michael, I have sort of the opposite question. So I'm
Sure.
starting just the e-commerce site, but if it goes well and there's already interest online through social media, people want to buy or see the product in person. I'm considering maybe like twice a month doing a farmer's market type of shop.
Mm-hmm.
With the Shopify store, because a lot of friends are telling me, well, you should use Square, but I want to just keep everything simple and the same platform. Can you use the Shopify store to sell your inventory in person?
Yeah, I'm not 100% sure on the question about using the Shopify tool. Shopify is really nice because you can plug in all those different things.
Right.
You can plug in your Square, your PayPal, your Google Pay, like all that stuff. It'll let you do all of those.
Okay.
While I use Shopify Pay on my website, I personally use PayPal when I sell stuff physically face to face. So I sell physical product primarily online, direct through my website. I sell through Amazon. I sell at local farmers market, pop-up kind of type events, and I sell direct to retailers, so small mom and pop pet shops. And I also sell what I call corporate, right? So people will buy 20, 30 vests from me at a time direct, and they just, I do an invoice that way. So you can sell through all those different channels. And whatever tool you use to collect credit card payments, say at the farmer's market, is up to you. They all roughly are about the same as far as the fees go. I personally have talked to lots of people who use Square and they love it. I use PayPal and I don't love it. But I'm taxed to the point where I don't want to go through the process of changing it, because the majority of my sales come from online. So again, I'm not advocating for one or the other, but they're roughly, I've done the research on them. They're roughly priced the same. So there's not a ton of difference or advantage there. It's just personal preference.
For all of the different avenues that you sell, whether it's wholesale to a store or online or the farmer's market style, is your brand the same, and would you recommend the brand be the same?
For me, I built this company from day one with brand as the number one priority of what I'm doing. So yes, for me, it's all about brand. I give you some examples. So there's businesses out there, as an example, that sell items that are like commodities, right? Like napkins, right? I sell napkins, and I don't care if you know that it's, XYZ brand of napkins. You just want napkins for your party, right? And so branding is not as important in that way. And if I'm selling, tons and tons of napkins, and there's potentially an advantage to having a separate business entity for one online channel versus a separate corporate channel. Right. So that might be something that you do. And this is a real life example. So I have a good friend of mine who was a customer of mine back in my days when I was a banking entity. And this speaks to Ryan's comment earlier about, having all these different business structures within the same business. Now, this guy owns a very successful line of shampoo products. That's what he creates, right? And he's got a C Corp, he's got 2 S Corps, he's got 3 LLCs, all within this larger entity of what this business is about. And he'll use an S Corp as an example strictly for inventory for the business, right? So the C Corp is the money channel back and forth between the supplier, but then on paper, the inventory gets moved from the C Corp to the S Corp, and it's simply a liability thing. If his warehouse burns down and all the product gets lost, it doesn't damage one of the other business entities. It's just housed within this one separate business entity. So that's typically where you see that. And his, just so you know, his company is like doing $100 million a year in revenue, right? So for businesses like most of us that are, kind of getting started, and, we're probably not going to be Daddy Warbucks anytime soon. You have plenty of time to make some of those changes, right? As you grow and as the business gets bigger and those kinds of things, and you're going to get more direct advice from legal counsel and accountants that specialize in setting up that kind of business structure for you.
Great, thanks.
Yep.
That was a really good question, Alexis. I like actually that. Yeah, it's a good idea. If you're selling successfully online and then you want to start selling things physically, what are the implications of that? And yeah, there are some tools, some ways to, from a practical standpoint, one thing you have to think about is how to manage your inventory, because you always want your inventory on your website to be accurate. But then if you start selling things off of your website, how do you get that inventory accurate again? And there are some ways to do that. And that is something we'll cover like in some of these future webinars when we kind of get deeper into the actual tools.
That's exactly the question.
And use those tools or you're going to end up with gray hair like me.
Too late. You just can't see them. But that's exactly what we're thinking about right now is how to separate the inventory or manage that. And thanks.
Very good. What did, maybe for you, Michael, or for Carrie, what are some of the most common questions that people come in to ask you about? Like, just how do I even get started? What's the tend to be like the most common questions that you guys usually tell people?
Yeah, so we always say, as Carrie mentioned, we offer advisory hours there at the Commons on Champa. And again, we can do it now virtually, and we do it every day. Both of us, I know, are still having those conversations. And so we always say that we can help businesses all the way from the ideation phase all the way up to the Fortune 500s who say, you know, hey, we're looking to relocate our business into Denver because we hear it's cool. We can help with that. That's what our offices do. Our office does. So our office is comprised of a team of about 8 people that primarily is charged with business attraction and retention, right? So we're here to provide resources to help businesses grow and thrive within Denver. So we get a lot of, you know, I have an idea, kind of, sort of, maybe, I'm not sure if this should be a business. What do you guys think? To, you know, can you help me with my business plan? Can you help me with a marketing strategy? I created this widget. I don't know if it needs a patent. Can you help me with that piece of it? I need, you know, I don't know, where can I find a good small business attorney? Financing is always a big topic that comes up, and we have some resources available through our office at the city that we can help early stage companies with gap financing. We have a long list of partners that we work with that work directly with small businesses that, as I always say, aren't yet quite bankable, right? They don't have 3 years worth of tax returns showing outstanding profits where they can go and walk into a traditional bank and kind of get that standard kind of business financing. What else, Carrie? I know there's lots and lots that we deal with on a regular basis, and I love having those conversations, but.
I don't think you left anything more for me to say, Michael.
Okay.
I think what the business development team does really well, in addition to our partnership with the folks at the Commons on Champa, really is basic navigation. So whether it's navigating the plethora of startup resources, as Michael referenced, we're really good at helping determine next steps. We're also really good at helping navigate just basic government regulatory requirements, as Michael referenced earlier, whether that be at the local, state, or federal levels. So I think it's really just basic navigation that we can really offer some support and kind of customized, personalized assistance. And then uncovering, you're lucky enough to live in a community that is so strong when it comes to entrepreneurial groups, resources, organizations, and we can help, again, identify what programs and resources are out there that might be a good fit for the stage that you're at.
Yeah, we always say at the Commons on Champa, the slogan is, if you're starting up, you start here, right? So it's kind of step one, and then we point them to all the great resources that Carrie just mentioned, but and also there's various programming and workshops and all kinds of things that we can offer to help businesses in that way.
So to talk to somebody from the Commons, would it just be online? You schedule an appointment right now? Is that the system?
Yep, you can request an appointment online. What I will do is send you the link to the Commons on Champa's website in the chat. I'm also going to include my email address. So should the site be experiencing any difficulties, and I'm not aware that there are any difficulties, but I will also include my email address.
Great, thank you.
That's great. Are there any other questions? Okay, well, I don't think I mentioned this before. So I wanted to just kind of give you, or maybe I did actually, about the future events. So in 2 weeks here, we're going to do one on how to brand your e-commerce store and your products. I did mention that, I know that. And then afterwards too, we don't have them fully scheduled yet, but we're thinking about things like how to configure your platform, whether you're using Shopify or WordPress with WooCommerce or Square, how to choose a merchant service provider, such as like PayPal or BluePay or Square, how to then do marketing and search engine optimization for your e-commerce store, how to do data protection, and with cybersecurity, there are certain regulations that you have to follow when people start giving you data, their own personal data, such as even just their name and address and credit card number. There are certain regulations that you have to follow to remain legal with that. And then things like how to integrate your inventory and how maybe a shipping tool. So we actually have a lot of things to talk about, and we are really kind of open for feedback at this time. If there's anything in particular that you want us to talk about that I didn't mention, then please let me know. Otherwise, I think maybe then I will end this here for today. So thank you very much, Michael. It's very informative. Just to talk about just the business structure. There's so many different options, and just that can be overwhelming, but yet you're making it so that it's less overwhelming, so that people can just kind of get in. And I think that's kind of the message that you're talking about, the taxes too. My interpretation is, let's just get your feet wet. Don't feel overwhelmed. Let's just start selling things, and then we can grow. And that's really true. As a business, you just kind of have to make that initiative, I guess. Just get in there, start doing things, and then you figure it out as it goes. I think that's part of it. I mean, obviously too, you want to have good, thoughtful strategies beforehand as well, but definitely part of running a business though is just kind of making changes as you go too, right?
Yeah, and I will add on to Alexis' question about the farmers market as an example, like from the sales tax perspective. So the farmers markets are really good. I'll call them farmers markets, but some of them are like the Denver Bazaar or the Denver Flea, or these kinds of things. They're really good about kind of walking you through what you need in order to be a vendor at their event. So they'll say, you have to have a sales tax license from the city of Denver because the event is being held in the city of Denver, and you have to show us a copy of that. Or sometimes they will say, we are taking care of all the sales tax, so you just need to sign this form that says we're going to take care of it. And then at the end of the show, you tell them how much you sold. And you say, I sold, several $100s worth. And here's my $35 in sales tax that I should have been paid, and they'll take care of paying it. So it's pretty easy kind of entry point to get in there with a lot of that stuff. And it's not too difficult to do. So I sell my product now actually all over the world, but when I first started, I literally was like, I'll meet you in the parking lot at King Soopers, and like open my trunk, and I would like, here's what I got.
That's my status right now.
Yeah,
that is literally where I'm at.
So
it looks like drug deals are happening. So bad.
And, collecting cash payments and those kinds of things. And I'm going to admit I didn't lose any sleep about whether or not I should have paid some sales tax on that $60 I collected in the parking lot kind of thing. But, the farmers markets are good about helping you with that piece of it. And then wherever you start, as you start to do more and more of that, you might find like, hey, you know what? People in Golden are buying my stuff way more than people in Denver. It's probably not likely, but I'm just making that up, right? So you might say that's going to be my first city and county that I'm going to register my business to pay sales tax in, right? Because that's where most of the volume is happening, and that's where my biggest risk is for getting in trouble for not doing what I'm supposed to do.
Right? That's great. One suggestion, since you are thinking about the other webinars, is for me at least, it's my business. There's a social enterprise aspect to it. So I'd love to hear about how to incorporate that into the branding and messaging of the business.
Excellent.
Sure.
Thank you.
That's great feedback.
I'll make note of that. Yeah, thank you. All right. Well, Alexis, I do appreciate your participation, your questions. It was very, very helpful and made it a fun conversation. Thank you again, Michael and Carrie and all the rest of you. And we will see you again in 2 weeks.
Great. Good. Looking forward to it. Thanks again, Ryan, for setting
Okay.
this all up, and Carrie for all your organization.
Yep. Thanks. Okay. Bye.